Hello everyone, thank you for joining us on this Saturday morning and welcome to this Specialist Trading educational presentation. Now today I want to talk to you about how to increase your risk-reward ratio. A lot of people like to use risk-reward in whatever they're trading. Doesn't matter if they're intraday trading the E-mini futures or day trading stocks or trading Bitcoin or currency pairs. It makes no difference. If you have an adequate risk-reward ratio, many people feel more comfortable and they'll actually do much better in their profit and loss statements. And there's nothing wrong with having an adequate risk-reward ratio. The only problem is that most people don't actually know how to implement it or how to apply it correctly. They'll be subjective and use their own discretionary idea, but it's not just as simple as saying, well, here's how much I'm risking. I guess I'll make, 4 times as much, so that increases my risk-reward ratio. You have to have structure. You have to have a plan. It's not just as easy as just saying, I'll sell higher or I'll tighten up my stop. There has to be a clear-cut plan in place that has some structure that shows a certain level of consistency. And that's what I'm going to be sharing with you today. This is just one of the many risk-reward ratio plans we have at Specialist Trading and in our courses. And today I just want to share with you one of them. And you'll be able to apply this risk-reward plan just as soon as we're finished using this presentation today, if you'd like. For example, as we look at this chart here, this older chart in NCLH, we see here that we had a buy signal, all right? Now, most people would say, well, maybe I'll put my stop underneath right here, or maybe I'll get out right here, but they don't have any clear-cut plan in terms of the risk-reward ratio. With the plan I'm going to be sharing with you today that is really simple to apply, you would have made sure that you exited right here and given yourself, in just 3 days, a 1-to-4 risk-reward ratio, meaning that for every one amount or one period or sector you would have risked, you would have made 4 times that amount. And on top of that, look what happened right after that. All right, you would have given back everything had you held on to this particular buy here. Now, the beauty of this is that all of this is auto-generated on our platform, the PTS Primo Charting platform. So not only will I teach you how to apply this today, but if you're a student of mine and you're a member of our courses, you'll see how this is auto-generated on our platform. You can apply it in literally seconds. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my webinars, well, I'm sure you're going to find out, or if you haven't found out by now, we are all about educating you. That is our only goal in mind. We're not here to tell you what we think the market's going to do. I mean, I have so many students that are constantly emailing me saying, well, Steve, what do you think of the markets? What do you think is going to happen next week? Or what do you think is going to happen today? Or they'll email me and say, Steve, what is the best time frame? What time frame do you like to trade? Or they'll say, Steve, what's the best market? What is the new hot market that we should be trading? You see, those are all answers that you should be asking yourself and finding out for yourself. A good educator simply teaches you how to trade so that you can ask yourself those questions and feel confident in making your own trading decisions. So that's the gap we fill. That's our sole purpose as an educator. Now, I feel that I can educate you because I've been trading for roughly 4 decades now, over 4 decades actually, 43 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. A specialist doesn't mean that you're any more special than anyone else, but if you ever Google those pictures of the traders on the floor that are yelling and screaming and have their hands in the air and are making all these weird gestures, those are what floor traders were, and specialists were the ones who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular stock, you walked up to the trader who specialized in making a market. So I did that for roughly 9 years on the floor of the exchange. I traded through the crash of '87 and the bull market that followed. So in my 43 years of trading experience, I know what works in terms of consistency and I know what doesn't. And you'll see that attention to detail today as I teach you this great technique for increasing your risk-reward ratio. But before we begin, as always, we're first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. Also, please remember that all examples are strictly for educational purposes only. Now, as I stated, we are first and foremost an educational company. If you're looking for more education on a daily basis, feel free to follow us on Twitter because every day I post different information, educational information from signals our strategies have generated to ways in which to apply and use our different techniques and indicators and methods. a lot of great free information, educational information, so please feel free to follow us on Twitter. Now remember, as we stated in the opening statements, we are first and foremost an educational company with our sole purpose simply to educate you so that you can ultimately make your own trading decisions. In my opinion, the reason why 80 to 85% of all traders fail is because of that simple little feature. You're not making your own decisions. You're letting someone or something else decide for you what to buy, what to sell, what time frame, what indicator. I mean, think about it. How do you make your trading decisions? Even if you think, well, Steve, I'm just waiting for the guy on TV to tell me what the earnings are, that's still waiting and relying on someone or something else, okay? Even if you're just following an indicator that's supposed to have the lines crossed and then tell you when to buy or sell, you're relying on someone or something else. Even if you wait for the earnings or wait for the jobless claims, you're relying on someone or something else. That's why most traders fail, in my opinion. And I can say this from firsthand experience because I did the same thing. 43 years ago, when I first started trading on the floor of the exchange, I did the exact same things. And as I often say to my students, if it didn't work 43 years ago, it's not about to start miraculously working right now. So every once in a while, those outdated and conventional wisdom techniques will work, and they'll give you a nice trade, and you'll say, hey, okay, this works. I'm on the right track. But over time, what do you really have to show for it? Most likely nothing, because they really don't hold a high level of consistency. So what we teach our students are high levels of consistency so that you can make your own trading decisions. Remember, our goal is to teach you, not to trade for you, but to teach you how to trade with the specialist edge. It's the same edge that was taught to me by my mentor some 43 years ago and what has sustained me, and hopefully it will do the same for you. Now, since this is an educational classroom, please ask me as many questions as possible, but as always, I like to take the questions at the very end. So please, if you have any questions, don't worry, I promise I'll get to them at the very end. The only question I will answer is this being recorded? Yes, it is. So we will be recording this entirely, and we're sending you out a link to this recording. So if you happen to have to leave early, if you're having technical issues, or as I've stated before, the last couple of Saturdays, I've had some construction going outside my office window, and as I can look out right now, I see the construction workers actually pulling up right now to begin the day's work. So if it happens to get a little loud or noisy, don't worry, the recording will have a much better sound flow to it, okay? Okay, so with that stated, let's begin today's educational presentation. What we're going to be talking about, once again, is risk reward, and we're going to be talking really about money management because that's really what it's all about. In fact, I would venture to say that money management, which is a part of risk reward, is more important than the strategy you're trading, than the market you're trading, the time frame, than where you enter, even where you exit, because it's all about money management. If you don't know how to manage the trade, if you're not aware of how to do that, most likely you'll fall into that 80 percentile where you pretty much give just about everything you have set aside for trading away. So this is extremely important. Money management, in my opinion, is actually more important than the strategy you're trading. It's more important than the market you're trading, okay? All right, so we're going to be talking about range extension levels. You've heard me talk about them before in the past. They're extremely important. And in order to use this particular technique, you have to first come to an understanding of what a setup bar is or what a signal bar is. I know a lot of you who have taken my classes and courses before. We have a good crowd here today. I see some students of mine. You already know what a setup bar or signal bar is. But for those of you who don't, a signal bar is where, regardless of what strategy you're trading, doesn't matter what it's based off, doesn't have to be one of mine, it could be one of yours or some other so-called teacher. It could be something based on fundamental news, or it could be something based on the full moon. It really doesn't matter what it's based off of. But when all the rules come into play, whatever strategy or technique you're trading, everything comes into focus and everything, all the requirements have been met on a certain bar. And when that bar closes, that is what's labeled as the setup bar. So it's extremely important to know when all the rules have been met, when all the requirements are all in place, that the close of that bar where everything came together is called the setup bar or the signal bar, because that's what we're going to base the range extension levels off of. And this is going to help you determine your risk reward ratio levels, okay? So as we look here is the standard definition of range extensions. What you want to do is you want to measure the range of the all-important setup bar, which we just defined. Now, what you're going to do is add or subtract that range to either the top or bottom of the setup bar, and that equals a 200% level. All right. Now, adding, subtracting that range again will equal a 300% exit level, and so forth. So these are our different units of measurement. So basically what we're saying is once you find and locate and identify the setup bar, the signal bar, you measure the range. Now, if it's a stock, it could be, 5 points, could be 2.73 points, whatever it is. But it's the range is from the very top of the bar to the very bottom of the bar. It has nothing to do with the open or close. That's not what range is. For some reason, it's been misconstrued that the range is open or close because so many students now look at candlesticks. That's not the true range. The true range is the top of the wick to the bottom of the wick. So that's what you want to measure. Okay? Now, if you're long, what you want to do is place that measurement, let's say it's 5 points, on top of that signal bar. And that will give you your first level. And if you want to go up to the next level, you just add another 5 points or so forth. If you're trading currency pairs, it'll be pips and so forth, okay? It all depends on what market you're trading. I'm going to show you a lot of examples, so don't worry if it seems a little wordy or convoluted right now. Don't worry, it'll be very simple to see once we look at some examples here. For example, here's a generic chart. Let's say this is our setup bar, okay? It makes no difference what market, makes no difference what time frame. It makes no difference what the signal is based off of. Once again, it could be the full moon. I really don't care. But at the end of this bar, when all the rules were met, this is your signal bar. So the first thing you want to do is to measure the range of that from top of the wick to the bottom of the wick. That equals 100%. And since we're long, or we're going to be going long, we want to add that. That will give us our 200% range extension level, and then so forth. We can add it again, okay? And you can see these are the different levels which you can exit if you'd like. Now this works to the downside as well. Let's say your method is based off earnings, and let's say there's bad earnings you came home, you saw there's bad earnings. So that determines that you have a sell signal in place according to your method, okay? So this is your setup bar right here where all the rules were met, where all the requirements came into play. So if you're selling or going to be selling, you want to measure the top to bottom, not the open to close, but the top of the wick to the very bottom of the wick. That's the true range. That equals 100%. Now, since we're selling, we take that same amount of points or pips or whatever we're trading, and we subtract it now. That'll give us 200%. And if we want to do it again, and so forth, we can get 300%, okay? All right, so let's look at some examples now and see how this can apply to increasing our risk-reward ratio. Remember, I just shared with you and taught you how to apply this technique. But remember, our platform auto-generates these risk-reward levels. So we've taken the hard work out of it for you. But as an educator, we never just want to make something a black box and say, listen, it doesn't matter if you know what this is based off of. Just go ahead and click on this button and see where these levels are. That's all you need to know. That's what kind of an educator would I be if I just said that? What we want to do is explain to you why you're using this so that you have a full understanding of the process. Then you can make a better decision as to whether you want to use this particular technique or not. So we've taught you exactly what they're based off of, how to apply them, and now we'll show you how they're auto-generated on our platform, okay? Here's an older chart of BIDU, all right? This is an actual strategy of ours. It generated a buy signal right here, okay? So first thing we want to do is we want to measure the range of the setup bar. So that would be the number of points, we measure that. And since we're going long, we'd add it and continue adding it. Now, it takes a little work. Sure, you'd have to get out the hand calculator and then continue adding. But on our platform, all you have to do is whatever strategy or technique you're trading, once there's a green arrow appearing, you just click on the corresponding technique or strategy. So in this case, it was, or sorry, before we say that, in this case, let's say you wanted to place your stop right here, okay? This is a very standard and generic place. You place it right below the bar that you're going to be buying. Okay, so now we click on the strategy, which is strategy number 4. In the drop-down menu, click on range extension exits. Remember, they are automatically generated for you. And we automatically know where these levels are. So how's this going to help us with our risk-reward ratio? Well, if we use this standard stop placement, which is right below where we're going to be entering, if we exit at the first level, we have given ourselves a 1-to-1 risk-reward. That means we're basically making what we're risking. For every unit we're risking, we're making that same amount of unit. And there's nothing wrong with that. I mean, a lot of people say, well, that's really bad, right? I mean, you're not going to make any money. Well, statistics have shown that over time, if you use the one-to-one risk reward, you're basically just going to break even. You're going to be treading water because, every time you make some, you're going to be losing the exact same amount. And over time, you really won't have a lot to show for it. The only way this really works is if you have some phenomenal strategy or system that is correct about 70 or 80% of the time, okay? But it all depends on how you like to trade it. We're not going to be really talking about strategies or entries or different ways to apply it. We're just talking about risk-reward ratio. So if you wanted to increase that, if you wanted to make twice the amount you're risking, well, then you would simply go up to the next level right here. All right. Do you see how simple that is? It's already pre-calculated. So a lot of our students say, well, listen, Steve, I want to get out and just make twice what I'm risking. I'm fine with that. I don't have to make any more, any less. I just want to get out. That's fine. Okay. Now, say you want to make a little bit more. Say you want to make 3 times the amount you're risking. Well, then you'd go up to here, all right, at the 3rd level. And then ultimately, I'm sure you've guessed by now, the 4th level, you'll be making 4 times the amount you risk. Now, this is where we say this is the max, especially when you're just beginning using this risk-reward ratio method. Remember, we have many risk-reward ratios, ways to apply it. This is just one of them. But if you're going to be using this, we would suggest to all of our students to get out of your position entirely with a 1-to-4 risk-reward ratio, because usually at this point, this is where you come into trouble and the trend will change. Okay, 4 times the measurement of the signal bar. So as we see the trade unfolding, well, look what happened in one day. Now, this is what students usually say, most likely beginning students. They say, well, gosh, Steve, I got it here or here, and look I gave everything away because it went up and higher. Well, sure. I mean, nothing's written and guaranteed in stone, but look what happened the next day. After that, wouldn't you have been happy at least selling here? Because for all intents and purposes, it could have gone lower. So these levels are extremely important. Now, another way to trade them, which a lot of our students like to do, is they increase their risk reward along the way. Where, in other words, let's say you purchased a couple of 100 shares. Well, maybe you'll sell 50 shares here. You'll sell another 50 here, another 50 here, and get out of everything entirely. So in other words, it's all not just, putting all your eggs in one basket at one level. Still, other students would say, well, my original stop is right here. The minute I get up to this first level, I'm going to move my stop to unchanged where I bought right here. Okay, so that way, at the very worst, if it turns around, I'm just going to break even. And then once it gets up to the 2nd level, I'll move my stop up to right here. So this way, at least I'm going to make a 1-to-1 ratio. If it gets up to the 3rd level, I'll place my stop up here. Okay, at least I'm going to make 1-to-2. And then if it gets up to the 4th, I'm out of everything. There are literally dozens of ways our students have shown us to trade this. Remember, you are in charge. Our job as an educator is to provide you with these different variables, ways in which to trade. Your job is to make the decision, not us. Especially with my new students, I'm constantly getting emails saying, well, Steve, what would you do here? Or what should I do? And that goes against our philosophy. We're never here to tell you what to do. My philosophy is to provide you with the information, teach you and stay there with you, trade with you side by side so that you can understand what makes you feel the most comfortable. Okay, let's look at another example to the downside here in TGT. Here was another actual signal that was generated by one of our strategies. I believe this was strategy number 10, I believe. It's a sell signal now. So the same thing is going to apply. We're going to measure the range from top to bottom, okay? And let's say we're not going to go short until we trade right below here, all right? So we're not short yet. We're waiting for it to be confirmed below here. So we're going to place our stop here. Once we get in, our stop will be right there. So for 3 days, we're not in the trade yet because we haven't traded below, all right? Now, if we want to know our risk-reward ratios levels in advance, we click on, yes, this was a strategy 10, click on strategy 10. Remember, with all of our techniques and methods, if there is a setup or a signal, you will always be able to get the range extensions. You just go into their drop-down menus, click on range extensions, and they'll automatically be pre-formatted. Now, you know how they're developed because you studied right now. You already know what they're based off of. But they're also automatically done for you, so you don't have to sit there with your calculator, all right? So if you go short, once it trades below here and you exit here, you'll make basically what you're risking, a 1-to-1 risk-reward ratio. If you like to make twice what you risk, well, then you would cover your position right here. If you'd like to make 3 times what you're risking, you'd cover your position right here, and ultimately 4 times, but that's where we suggest the same way, even though it's to the downside, we suggest getting out of the trade altogether and covering your position. Now remember, there's multiple ways to do it. You could exit a portion at each level. You could trail your stop using each level. It's entirely up to you. But as we see this trade unfold, well, look what happened. We gapped down, so maybe you would have gotten short well below, but you still would have had a chance to exit down here, and that would have been a nice trade, okay? Now let's look at some recent examples so you can actually see this in progress and how it happened. And many of these examples happened within the last week or two. So using some of our methods and techniques, you could have applied this in the last week or two and see how this could have helped you extremely trade, even in these really volatile markets. All right, looking at Nike, this happened on the 21st. This was actually this week. I believe it was Monday. A buy signal was generated, okay? Rather than taking out the hand calculator, all you have to do is click on the strategy and it automatically provides you with the risk reward levels, okay? Depending on what type of trader you are, remember, it's entirely up to you. There is not one level that is better than the other. So I don't want you to think that, well, I don't want to be embarrassed and say I'll get out too quickly and use the first level. Many of our students, do very well, and they say, listen, I'm getting in and out of this quickly. I don't care. I'll use the first level and I'll move on to the next one, because most of the time it's going to get there and it's not guaranteed it'll get up to the third or even fourth level. So I want to get out quickly at the first level. It's up to you. But, having said that, look what happened. You would have entered here ultimately and you could have gotten out, but look what happened. The second day it gapped up and you would have been able to exit, and that's where it started having trouble, okay? Here's another example in Facebook. This was on the 15th of September last week, a couple of weeks ago. Sell signal. Here are the automatic risk reward levels. All right, you could have hit the first level right here, the second level, and the third level on the second day. And on the fourth day, you could have covered the entire position with a 1-to-4 risk reward ratio. And then look what happened after that. Do you see how the trend changed all of a sudden? For 3 or 4 days, it went lower until after that, it continued to go higher. Here's another example in DKNG, okay, DraftKings. A buy signal was generated on the 9th of September. You measure the top to bottom, and then you simply add that range to get 4 levels, but we'll take all the hard work out of it for you. We do it automatically, okay? And you can decide for yourself. Now, let's say you've been watching this stock. Let's say you base this off of earnings or off of what the company's doing or fundamental news, and you really think this thing is going to take off. So you want to exit everything at the 4th and final level. So you enter into the trade, you place your stop somewhere down here, and you don't care about these levels. You're just going to go for broke right up here. And you wait about a week or two. Ultimately, it got there. Look what happened. It just barely got there. So you have a nice little profit, over 10, probably about 12 or 15 points in about a week or so. And then look what happened. Okay, see how it runs out of steam there? That's why we always suggest that at the 4th level, that's where you should be exiting out of everything. Okay, advanced traders may want to use some of our other advanced techniques that we teach you in the course, but beginners just using this method should exit everything entirely, whether you're going long or short. Here's another example to the downside. SYNH, a sell signal was generated. We click on the range extension levels. We decide which level we want to get out at, and ultimately, we got in. We could have gotten short at any level we could have covered and made a profit, okay? Now, here's what a lot of our traders do. Since, let's say you wanted to use the confirmation method, meaning that you're only going to go short once it trades below here. Well, for 2 days, you're not doing anything. But once we opened right here, well, you would have gotten short. And so a lot of students say, listen, I'm going to exit, intra-bar there. So at the very first level, they said, I'll take my quick profit and get out. Or a lot of students would say, well, I got in right here, I'll get out at this level. So in other words, you don't have to enter right at the close if you don't want. You can enter the next day and then get out the minute it touches one of these levels. It's entirely, as I said, you're in charge of your trading. Our sole purpose is to provide you with this information so that you can make your own decisions, not us. Here are the QQQs, the ETF that represents the NASDAQ 100 index. A buy signal was generated in August. This was in mid-August, okay, about a month or so ago. Don't you think that would have helped you with the market when the market was going up? You didn't have to actually trade the QQQs, but you could have used this as a market directional tool, telling you what you thought the market was going to do. In other words, if a buy signal is being generated in the ETF that represents the NASDAQ, don't you think that the market is going to be going up? So that's the levels where you think the market should go to, depending on your own research. And as you see here, at the very beginning, the first week of September, we got up to the 4th level. At this point, if you were just using this as a directional tool, not using this to trade the QQQs, but as a market directional tool, most likely, especially off what we teach you, you should be saying, well, Steve always says this gets up to the 4th level, then it has a little trouble. So most likely the market's going to have a little trouble. Maybe I want to get out of my positions entirely where I've been buying stocks that are in the NASDAQ. Maybe I want to raise my stops, or maybe I want to sell a portion to take some profits because we're at the 4th and final level. And that would have been a wise decision upon your own decision. We're just giving you the information, but it would have been a wise one because we all know if you had exited there, you could have bypassed all of this that happened the first week of September. This is why the 4th level is so important. A 1-to-4 risk-reward ratio is probably the most you should take before you exit entirely. Letter C, okay, Citigroup. Here is a sell signal. Here are the different levels you can decide to get out: a 1-to-1, 1-to-2, 1-to-3, 1-to-4. If you went short right when you traded below, you could have said, well, listen, I'm entering to go short right here. I'm going to cover right here. Okay, make a point or so. It's up to you. Or you could have entered, got out at 1-to-2, 1-to-3. Waited a few more days, 1-to-4. As we look at Roku, okay, buy signal on the 17th of September. In a week, we got right up there before we started to have trouble again. See, it's almost like magic how it gets up there. Not guaranteed, but we've seen that it happens more often than not. Here's an example in ACIW. A sell signal was generated. All you have to do is click on the strategy or signal, whatever it is, and you will get the automatic levels. You can decide which risk-reward level you want. You could have gone short either on the close or confirmation method, or a number of our different ways for entering into a trade. Remember, we're not telling you also how to trade. You don't have to actually short the stock if you wanted to buy a put, if you wanted to have some spread with a bias to the downside. That, once again, is your decision. We never tell our students how they should enter into the trade. It's your decision. I talked to a student last week that said, Steve, can you tell me which spread I should get into, or which time delay, how many months out should I go? That's up for you to decide. Remember, we're not an option course. We're not a course telling you what to buy or sell. We're just simply giving you this information. Our goal is to put the power back in your hands. Remember, the reason why most traders fail, in my opinion, is because you're taking your power away. You're letting someone make your decisions for you. We will never make any decisions for you at Specialist Trading and Pro Trader Strategies. We will give you the information for you to make your decision. So if you're an option trader, you have to do the research. You have to paper trade and see which is the best strike price. You have to see how far out to go, okay? If you're trading the stock, you have to see whether you actually want to short it or whether you just want to simply buy a put. It's entirely up to you. Either way here, we see that once again, in just about 4 days, we got down to the 4th and final level. Could have exited altogether there, and then look what happened. The trend started to change upwards. As we look at letter R, okay, Rider Systems, we see that we have a buy signal generated here in August coming into September. Here are our 4 different levels. Took a little while to get there. We got there right about a week or so ago, but we just hit the 4th and final level. So let's say you were selling a little bit at every level just to get out, and finally you exited everything altogether. Wise choice, because look what happened after that. You would have given everything back if you held on. Now, we know not everyone trades just stocks, so let's look and see how this can be applied into other markets, other time frames. Also, I want to share with you that just because we showed this 4th and final level a number of times, remember, it doesn't mean that it's always going to get there. You will get to the 1-to-1 risk-reward ratio more often than you will get to the 1-to-2, and more often than you will get to 1-to-3 and 1-to-4. Remember, the further you go out, the least your chances of getting to that point, but you also have a greater profits if you do get to that point. So these are all things you have to take into consideration. For example, as we look at this E-mini trade, the older chart in the E-mini, this was a buy signal on a 15-minute time frame using one of our strategies, I believe strategy number 4. Okay, here are the 4 levels. Let's say you had picked getting out of everything at level number 4. Well, as we see the trade unfold, it got up to level number 3. You're just about there, licking your chops. You're all ready to make a nice profit, and then look what happens. All right. This is why we say you always have to protect yourself. So even if you don't move your stop up to these different levels. Once you get up to a certain amount or a certain level, you should move wherever your stop is to unchanged, at least, because that way you don't want to turn a winning trade into a losing one. Trust me, for someone who's been trading 43 years, the worst feeling in the world is not to buy something and the minute you buy it, it goes the opposite direction. Sure, that doesn't feel good either. But the worst feeling in the world is knowing you had a profit and a really good profit, and then all of a sudden one day it's all gone and that trade now is a losing trade, right? That is the worst feeling in the world because you were there. All you had to do was exit and take your profits, but you held on too long and now it's a total loser. And now you don't know what to do. So protect yourself, especially if you're an intraday trader, because things can happen very quickly. So even if you weren't able to exit at the fourth level, you can move your stop to unchanged or trail it, or use any of the other different stop techniques we teach you in our money management course. We have upwards of 6 or 7 different stop placements, ways to track the trade. We also have other risk-reward ratio techniques and methods. We have a ton of different ways to help protect you and to use proper money management in our money management courses. Here's an example, a weekly chart of the Swiss franc, okay? We're using an entirely different market, an entirely different time frame, but nothing changes. All you have to do is click on whatever strategy or technique you're using, and there are the 4 different risk-reward levels, okay? You can decide whichever one's best for you. Now, this one happened to go down to the 4th level. You could have covered and see how the trend changed and went even higher after that. This is on a weekly chart. So it makes no difference what time frame or what direction. You'll always see a number of examples, excuse me, where we get down to that 4th level and all of a sudden the trend changes. Okay, so let's recap before we go and tell you about a great offer we have and we answer any questions that you may have as well. Remember, the range extensions are based off this technique. You want to measure the range of the setup bar. If you're not familiar with the setup bar, a setup bar is simply the close of whatever bar where all of the rules and requirements are met. Let's say, it's based off of the jobless claims, okay? All right. Whenever the jobless claims come out, or whenever you come home from work, or whenever you see the news and you say, wow, that's really good news, or wow, that's really bad news, if it generates a signal on your strategy, well, the close of that bar, wherever that took place, wherever those requirements were met, is your signal bar. So you want to measure the range of that. Now, if you're long, if it's a long signal, you simply measure the range and add it. Continue adding that same amount of range on top of each other. If you're short, if your signal generated is a sell signal, then you want to take that range and subtract it. Okay? You just keep doing that, and that will give you these different risk-reward exit levels. Now, before you ask me questions, I want to ask you one and answer this honestly. Do you think this tool can help your trading for the remainder of 2020? How about a lot more really well-defined and really powerful money management techniques? Not only techniques for risk-reward, but techniques for stop placement, techniques for exiting, okay? Techniques for really managing your money and tracking the trade. Well, here's what we have for you today. We have a great special offer for all of you attending today. We are going to give you our 7 Secrets of Money Management course for a great price. This is, 7 different videos. It's a great course. It's instant course access. On top of that, actually, it's one more video. It's 8 videos altogether. We're going to give you 6 stop placement techniques, an RPS method, it's a tremendous method, which I'll share with you what it is in just a few minutes. Risk-reward ratios, a lot more different methods than the one I just shared with you today. ATM, our advanced trade management, a technique I only teach in this course and in our college courses. And on top of that, along with all these different money management techniques, you'll also get access to my personal email where you can contact me anytime during the weekend, during the middle of the night. Ask me questions and I'll be there to answer it as soon as possible. Now, remember we shared with you how most of this is auto-generated on our platform. That's the beauty of our PTS Primo Charting platform. I developed this with ProTrader Strategies to make your learning a lot easier and make it simple to apply these things. In the past, before we had our platform, everything was just taught and you kind of had to calculate it by hand or with a calculator or write it on a piece of paper. Here, it's one click away. This is the educational platform that automatically generates these risk-reward levels. Well, here's what we're going to do. We're going to offer you 6 months included free with your membership to the 7 Secrets of Money Management course, okay? 6 months of the platform. Now, it just doesn't have those risk-reward levels. We're going to throw in a lot more information as well. You're going to get our proprietary RPS method calculator. This is a calculator that calculates the perfect position sizing you should have for stocks. So it takes the guesswork out. I've done webinars on this in the past. It's a great method. We've had tons of great testimonials and reviews by our students that say, Steve, I no longer have to guess how many shares. This does it for me automatically, and it's a great, great tool, okay? We're also going to give you our enhanced buy-sell line feature. This is, I've said this before, if I were stranded on a desert island and I could only trade with one of the techniques I've accumulated in my 4 decades, it would be this. Because this has saved me so much and kept me out of so much trouble, it automatically tells you the overall trend, and it has 4 different ways for defining that. You're also going to get a strength of trend tool, another phenomenal tool I've developed with ProTrader Strategies. It has an uncanny ability to really give you an insight whether there's more room left in an up move, a strong up move, or a strong down move. So it actually tells you if the momentum is drying up or if it's still very strong. This is a great tool. That's going to be included as well. You'll get our signal scanner. You can scan for tons of different setups, tons of different techniques that we teach you on the platform, and you can scan for them on a nightly basis and see if there's signals generated the next day. Over 90 of the most prominent technical indicators, so you can tinker under the hood and use them if you like to develop your own strategies or techniques. Auto-generated exit levels, the risk-reward levels, which I just shared with you today, you'll get those also. And this all comes with personalized tech support. If for any reason you have trouble, can't load up a chart, you're not sure how to use or apply something, our tech support will be there in a matter of moments to resolve the issue for you. This is all included. You get this free for 6 months, and this is just the tip of the iceberg. There are so many more things included on the platform. 43 years of things I've accumulated that I just don't have time to go into right now. That's all going to be yours for 6 months. So let's break this down. What do you get in our 7 Secrets of Money Management course? All this information, 8 videos, stop placement, RPS method, risk-reward ratios, advanced trading management, along with correspondence, educational correspondence through my personal email, okay? Believe me, money management matters. It is more important than the strategy you're trading. It is more important than the time frame. It is more important than the market. I can't tell you how many times somebody said, I have the perfect strategy, Steve, this works amazing, and then they didn't apply money management and they blew up, meaning they lost everything. You have to have proper money management in play, regardless of what market, time frame, or what strategy or system you're trading, because they just won't get the same type of results without the proper management. Okay, so let's break this down. Now, normally, if you purchase all these different individual trading courses for money management, it would cost you close to $5,000. We're not going to charge you that. We're not going to charge you anywhere near that. We're going to throw all of this in, included together with 6 months of the platform for only $297, less than $300, okay? You're going to be saving over $4,600. Now think of it, less than $300, you're getting 8 videos plus 6 months of our platform for free, included with me as your personal mentor, correspondence through my email, okay? Lots of great free information for less than $300, okay? So trust me, you owe it to yourself to take your trading to the next level. Become a student of mine in the money management course. Here's how to take advantage of this great $300 value, actually less than $300, okay? Contact ProTrader Strategies. They have trading consultants manning the phones right now. You can call them up if you have any questions concerning the price or the platform. I would recommend if you have questions concerning price or tech support, call them directly at 310-598-6677. They can answer any pricing or tech support questions. Now, that link you see at the very bottom is the link that will take you to the sign-up page if you'd like to sign up online. And there's more information on that as well, but it's not a live link. So we just posted a live link in the chat box. This is in the GoToWebinar column in the far right. So if you look in the chat box, there's a link that's been posted there, okay? Now, I promised you I would answer questions at the very end of today's class. So if you have any questions, go to your question and answer box, type them in, and I will answer them to the best of my ability, okay? Some people said, I'm sorry, I had to leave early. I will get to work with your information. I'll use the recording. Sure, that's fine. That's why we specifically record this for people. So we know that you can't watch this, all the time on your Saturday. Some people have to work. Some people have technical issues. The only thing I would say, though, after viewing this, remember that $297 is for a limited time only. I believe it's only for this day for 24 hours. So if you're truly interested, after watching this video, you will most likely get this video today. Once you've seen it and watched it again, you make a decision. You say, you know what, gosh, I'm going back. I'm looking over my last 10 or 20 trades, and most of them would have worked out okay, but my money management was terrible. I was placing my stop too tightly, or I was getting out too quickly. And maybe I could use this stuff. Maybe it could help me. And for less than $300, you want to take advantage of that. So I would really suggest watching this video today, but then making a decision in the next 24 hours, because you don't want to call back up next week or next 2 weeks and see that the price has gone up to $5,000, okay? Someone is asking, will this work on currency pairs? Yes, it does. It makes no difference. Wherever there is a signal bar, wherever there is a setup bar, doesn't matter if it has to be based off of pips, doesn't matter if the Australian dollar, 10-minute chart of the Australian dollar, or a 4-hour chart of the Canadian dollar, makes no difference. Okay, this can be applied to anything because all you have to do is measure the range. And on top of that, all of the information and the techniques and methods on our platform can be applied to currency pairs as well. So there's just tons of information. I've included over 4 decades of things that I've accumulated on the platform that are going to be yours free for 6 months, okay? Can you show your entry or exit strategy? Thanks. Well, unfortunately, we're not going to be, as I said, maybe you came in a little late. We're not going to be talking about strategies today. We talk about those in other weeks. I'll go over those, in other weeks to include it. But remember, today we said we're only going to be talking about money management. Okay? We have specific courses just on entries. We have specific courses just on exits. And we have specific courses with different strategies. We have candlestick strategies. We have short-term strategies. We have longer-term strategies. We have strategies based off of technical indicators. We have strategies based off of patterns. We have a lot of different information. So if you're interested, contact Pro Trader Strategies. Remember, there's absolutely no obligation. They would be happy to answer any question for you concerning prices or what they're actually made up of those strategies. But don't want to go too far ahead of ourselves. Plus, I don't have a lot of slides. If you've come to my webinars in the past, I like to teach through showing you slides, and I don't really have any slides regarding entries and exits today. So that way I would have to just say them to you, and most likely you wouldn't understand. Okay, so we'll cover that in another week, probably in the next couple of weeks or so. Today we're only talking about money management, and remember, as I've often stated, even if you have a great strategy, even if the strategy generates 80% winners, even if the strategy has a really small risk, even if it really trades the way you like in the perfect market, if you do not apply proper money management, it really makes no difference. Most likely that strategy will lose money for you because you have to manage it. It's like anything. You just have to make sure that you are, making sure that it doesn't get away from you, making sure that you have the proper risk-reward ratios. You have to make sure you have the right stop placement, the right entries and things of that nature, the right way to track the trade with stops. All of that is included along with the proper amount of shares as well, or contracts that you should be purchasing. This is all included in the 7 Secrets of Money Management course. Extremely, extremely valuable, okay? Okay, I guess that brings us to the end of the class. I'm sorry, one more question. Eric, hi. It says, how does a person really know which range extension is for them? Do you try them all at first? Well, remember, the range extension levels are, yes, that's the only way, and it doesn't even matter if it's the range extension. It can be anything. It can be, how does someone know whether this entry is right for them? How does someone know if this time frame is right for them? You have to paper trade. And I often state this. You must paper trade. That is how you find out things. You will not find out by asking someone, what is the best range extension level? Or what is the best entry technique? Or what is the best strategy to trade? Remember, what does that do? As I said in the opening statements, that takes you out of the game. And once again, you're looking for the answers outside of yourself. You have to find the answers. And the only way you can do that is by doing the due diligence, doing the research, and doing a little soul searching as well. You have to find out for yourself. Ask yourself, listen, if I'm going to be getting out at the 3rd level or the 4th level, that obviously, using some logic, would mean that I'm going to be in the trade longer, right? Because it may take a little longer to get up there. So then you have to ask yourself, am I the type of trader that likes to hold positions overnight? Maybe for a week, maybe for 2 weeks, because it might take that long to get there. If I'm not, if I couldn't sleep at night knowing that I'm holding a position and I'm scared that maybe some bad news or things that are going on in the world, then maybe I don't want to use those levels. You see how you have to do a little soul searching and asking, what is right for me? What is going to make me feel comfortable? If you're the type of trader that says, listen, I have no problem waiting a week, a month, I'm a long-term trader. So then maybe level number 4 is right for you. So you have to ask yourself, what type of a person am I? Do I feel uncomfortable? Do I have a difficult time sleeping at night knowing that I have a position where it hasn't reached my exit level yet? Or you say to yourself, no, I have no problem at all. I don't want to be trading 10 times a day and getting out at the first level. I want to hold on to one position. So you have to ask yourself, what makes you feel comfortable? And then go over a lot of different paper trading setups and see what you would like to do. That is how you become a consistent trader, not by asking a so-called teacher or mentor, what's the best one to use? What's the best time frame? What's the best strategy? Because trust me, I did that with my mentors, and the same answer I'm giving you is the same answer they gave me. They said, Steve, you have to find out for yourself, because what may be comfortable for us may make you extremely uncomfortable. And I said, well, I don't understand. Why can't I just do what you're doing? And they said, because you won't feel comfortable, you won't feel right, and most likely, if you're not feeling comfortable, you're going to lose money. Because you'll second guess it, you'll get out too early, you'll use the wrong rules because you want to make yourself feel better. And over time, you'll say to yourself, it's not working, because you can't follow what someone else does. You have to only follow what makes yourself feel comfortable, okay? I hope that answered your question. And I'm not trying to be facetious and say, you've got to find it yourself and, just squeeze out of doing the work. But that really is the truth. That's the only way you can figure out what these levels best are for you. They're all, subjective, okay? Okay, good questions. I hope that answers them, and I hope you learned something today. This is just one of the many techniques, just dozens of techniques we share and teach with you in our 7 Secrets of Money Management course. So please take advantage of this extremely low offer, less than $300. Can you honestly say in the last month, in September, you haven't already lost $300 trading? I know many of you have, and that's okay. All right, it's not a ton of money, but for less than $300, you could have gotten roughly 4 decades of information and knowledge right at your fingertips, and it's yours to keep forever, along with 6 months of our platform. So this is a great, great opportunity to take your trading to the next level. Take advantage of it. If you have still questions, contact Pro Trader Strategies. They would be more than happy to answer any question that you may have, okay? As we close here and take one last look at our disclaimer, thank you so much for taking time out of your Saturday. I hope you learned something. Remember, if you're going to be using this technique, be sure to paper trade first. Don't just jump in. You have to find out which level makes you feel the most comfortable, okay? As we close, I just want to say thank you so much. I hope you learned something today, and I look forward to all of you becoming students of mine in the 7 Secrets of Money Management course. Have a great weekend, and I'll see you next week. Bye-bye.